I think what we're seeing is we're just seeing a maturation of the asset class, which means for you, the listener, the important takeaway is just to be more patient with positioning and just sort of let things play out.
This episode is brought to you by Kraken Custody. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Welcome back to another 1000X podcast. Excited to be talking with you, Jonah, again. Sorry, I was feeling a little under the weather the last few days, but feeling much better now, especially because of the price action. How are you doing, Jonah?
Doing good. Portfolio's close to all-time highs. Feeling happy. I think what's interesting is that, there's some commentary on X about how everybody's expecting one last pump before the cycle ends. And I think that people are getting tired of this cycle because it isn't a face-ripping 10Xer like maybe the previous one was, where everyone was just getting rich on everything. And even a monkey throwing darts could end up with some pretty substantial bags. Here, it's, Bitcoin's been kind of ranging for a while. And altcoins have been hit or miss. Some of them have been amazing. Others have just been kind of meh. So I think what I would ascribe all of this hesitance on X to is just sort of impatience. And I would say just general, I wouldn't call it amateur hour, but just immaturity. Like, why should it be that every cycle has to be the same and every cycle has to conclude with a insane parabolic upward, like kind of melt up price action type thing? I don't necessarily think that's the case. I think we may be in for a 6 or 7 year cycle where we're just part of an upwards kind of choppy grind for years as crypto gets widespread adoption and all of the bullish fundamentals that just kind of happened in the last 6 months start to, just like the bullishness of those deregulatory actions and institutional adoption start to kind of proliferate by osmosis into the crypto ecosystem. I think it'd just take a while and be less aggressive. So I'm not throwing in the towel. I don't think there's going to be one last pump and then it dumps. I think this is just, this may just be a little too slow for the moon boys out there. What do you think?
Yeah, I think it has been slow for the moon boys. I mean, it's been slow for everybody. It's just, it's been a choppy grind higher. I mean, things are not, except for Oracle today, which is up 40%, which is crazy, and we'll get to that. Things tend to move. Things have tended to move a little bit more slow this cycle, and you get these 5 to 15% days from a lot of assets, but you don't get those 100%. Everybody crowds into the same coin for 3 weeks kind of absurdity that you saw in 2021. Like, I still remember when BNB went from it's like $35 to $400 in the span of 4 weeks. It's like you're not seeing that. I mean, even something like a Hyperliquid, it took Hyperliquid months to rebound from that $9 sell-off level to the 50 that it is now. It like took months and months and months to actually accomplish that. And so I think what we're seeing is we're just seeing a maturation of the asset class, which means for you, the listener, the important takeaway is just to be more patient with positioning and just sort of let things play out. I can give you 2 separate examples of this that happened recently. I 9 days ago tweeted out that I was overweight Solana and that I was long because of the stuff that the new stuff that we had heard about the cash component of these digital asset treasuries that are coming up. So the new component is that they are raising cash. I mean, some of that cash is being used to buy locked SOL. So there is some sort of circularity there, but at least 80%, as far as I'm hearing, is earmarked to buy a fresh Solana on the market, with 20% or so reserved to buy that locked SOL. And that was very different from the other structures. I got in long Solana around 195, and we chopped for a bit. The news did not immediately come out. There was a bit of chop, and even now we're only 15% up. It's not like the thing doubled. I still hold on to some of that Solana, but I took off, most of the overweight position that I hold as the trade, but it took almost 2 weeks to play out. That took some time to get into the markets. Another good example of this is the Galaxy trade that people have been talking about. I mean, today, it traded from 30 down to 22, back up now to 27. It's sort of been ranging, but I'm still bullish on the stock. Like I'm still bullish on the asset. I'm bullish, especially now that Oracle's done very well. I'm bullish on the idea that this data center is going to provide a ton of value to Galaxy, that it's not being priced in effectively by the market, and that they're going to be able to sign a bunch of contracts moving forward, and they're going to up the value of the stock. But it's not this instant gratification, right? You're not getting into an asset and then having it immediately go up 75%, which is happening more so in the meme coin circles. I mean, another great example of this trade was the pump trade, right? A lot of people said, hey, I think that accumulating it between $2 to $3 billion is a great trade. And it took a while. That's been, it took a few weeks for that thesis to play out. So I guess what I'm trying to explain to the listener here is build some conviction in a thesis and sort of sit in it. Don't necessarily, you might not want to be trading ridiculously actively, on like week to week basis as you might have in a prior cycle. And just talking about what is enticing in this market, it is stuff like that. It's stuff where you can get some sort of edge on the market and say, okay, well, I think that Galaxy's AI data center is undervalued, or I think pump.fund, this is it's like uni versus sushi. I think the bonk's gonna fade and pump's gonna come back, so I'm just gonna accumulate and wait, right? That happened. Or I think that this DAT for ENA is going to continue to kick off the flywheel and continue to massively grow it, and therefore I'm going to get long. That's real. Or Hyperliquid is another great example of this. Even though everyone knows it was doing buybacks, it still traded from 40 to 45 for a substantial period of time, allowing people to get that 20-25% trade. It's just that it wasn't the hot coin in the moment, and it was going to take a little bit for the sellers to sell to the new buyers for the average price, which is really important. For the average entry price to go up, and then it started going up again, and now it's trading really well. And so I guess patience is the key here. It's like find specific assets. I think Syrup's going to be another one that we've talked about for a while. It's like you kind of just have to wait it out. Like it will prove itself, and this is not the market to be chasing like flash in the pan stuff right now.
Yes.
This is a market where you can actually invest. I mean, again, another great example of this could be BNB. I think there's a slow burn on BNB right now. I see no reason why it shouldn't go trade over $1,000 in short order, given the fact that you have the U.S. government and CFTC coming out saying that they might open perp dexes to U.S. investors. I mean, that's huge. So, and obviously, Binance cares a lot about the token, and Binance is still stuck around, and Binance is still doing extremely well. So if there's even if it goes from a 5% to a 30% chance that you get access as a U.S. investor to Binance, I mean, BNB should be at least 10 to 20% higher right now. I mean, that's actually a position that I have on in the book right now.
Interesting. I mean, my book's pretty limited here. First of all, so agree with your take. It basically, going back to your old framework of value and momentum, right? Like, is there value? Well, can investors reasonably expect a 2 to a 3 bagger in the near term? That's value. Is there momentum? Like, is the thing trending up? This is the Avi framework, right? Maybe we should add a third thing in there, which is fundamentals. Now you have the golden triangle, the holy trinity: value, momentum, and fundamentals. And I was just, you were talking about pump. I have a Blockworks research account now because they sponsor our pod, so I just pulled it up there. You can just see on here, like, they're doing 1.3 to kind of $2.5 million a day worth of revenue, because people are still just launching shit coins with reckless abandon. We thought this was a last summer thing. It's not. All these green bars are pretty recent, and their buybacks reflect that, right? Maybe there's a 1 or a 2 day lag, but like they're buying back. It looks like most of basically they're taking most of their revenue and doing buybacks with it, which is exciting. So if they buy back 1.5 million a day, that's $500 to $600 million a year worth of buybacks. That's like, it's a pretty substantial percentage of their float. I think it's like, what is it? Yeah, that's a lot of their float. So I don't have their market cap committed to memory. FDV is like 5.5, market cap's something under 2. So yeah, I mean, they're really buying back a significant percentage of what's out there. As weird a trade as it is, even if you don't believe in it, you can still invest with that value thesis because it's, whatever, 1/10 the price of Hyperliquid. There's momentum, no denying that. And the fundamentals are there. And you can literally track it on a Blockworks dashboard or any other dashboard. And as soon as the fundamentals disappear, you'll know. Like you could see if they have a couple of bad revenue days in a row, you can start to think about it. It's kind of like that ETF tracker that we use to trade the Bitcoin, trade around the Bitcoin ETF and the ETH ETF. You just sort of watch it every day and monitor. So value, momentum, and fundamentals. A couple of other things you mentioned, Oracle stock. Holy moly, Larry Ellison is the richest guy in the world now. Who saw that coming? That's Oracle's kind of like a dino coin to me. Like that thing has been around since before I was born, and it's just still going. Hats off to Larry Ellison. What an absolute gangster.
And richest man in the world now, which is
insane.
Pretty cool. One of the things that I really liked about what he did in the whole story is, I don't know if you know this, but I think a little bit more than 10 years ago, his stake in Oracle was 27%. And he got it up to around 40% because Oracle kept buying back stock, and he just did not take it. He he never sold his stock back. He never took part in the buybacks, and so they just destroyed the shares that they bought back, of course. And he just continued to increase his ownership of the company, which I thought was awesome. One of the reminds me a little bit of what I think the Ripple guys are doing right now. So if you go look at Ripple stock, where it trades right now, I think it's trading
Ripple equity or XRP?
Ripple equity.
Okay.
So Ripple equity, I guess it's trading up. It's trading at around 137 on the secondary markets. They are doing a stock buyback for substantially higher than that right now. They just sent it out to their equity holders, and that's pretty consistently over the last call it 2-3 years. They've just been buying back their stock, and by all accounts, it's been a phenomenal trade for them. They did, I think, their first buyback at like 60, their second buyback at like 80. Now they're doing one at 250. I mean, this is like, they just keep buying back and the stock just keeps going up, and everybody, all the equity holders, it's basically like maximum subscribe each time. And it like tells you a lot about like if the insiders are super bullish, right? Like, and they see everything that's going on. They're ridiculously bullish. If they're willing to buy back here, like where do they think the stock is going to go is the question. And obviously when you're stuck in an illiquid stock like Ripple, this is kind of your only path to liquidity other than shopping around on the secondary market. So basically everybody takes it for that fact, for like, okay, well, I have no idea when I'm going to get liquidity, so and they cap it at like 5% of overall flow. Like we're not going to buy back the whole thing. So like, okay, you can sell up to 5% of your Ripple stock. All of this to say, I think Ripple's probably planning on going public soon, and that's probably pretty good for the price of XRP and for everything Ripple related.
So they're traders. They know what they're doing. They're not buying it back because they want to hold it for the long haul. They're gonna IPO it and sell it to other investors.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. As always, investments in blockchain technology involve risk, terms, and conditions apply.
There's so many of these companies that just break my TradFi brain. There's Ripple. Have you seen the Tron chart recently?
No, tell me more.
It is the smoothest chart in crypto. Pull it up in your trading view or CoinGecko or something. I've like the weekly chart. I've never seen a chart this smooth in crypto. No token appreciates like this. And it hasn't been on my radar because I've just dismissed it as like a cult of personality coin around his eminency, Justin Sun. And I've also dismissed it because it's basically the fastest chain for Tether. And so it's just a crime chain. But now that I'm thinking about it, you know, you have Justin's son and the other big crime family of crypto, the Trumps, kind of like getting into bed with each other. And as on-chain GDP grows, crime on-chain will grow. And none of the other stablecoin chains, well, Tron is basically a stablecoin chain, in my opinion. None of the other stablecoin chains like Plasma or Tempo, which we should talk about, the new Stripe paradigm, decentralized with air quotes chain. Those chains aren't going to compete in the crime space. Like Tron might just remain a monopoly for crime on chain. They're kind of like the Monero, or what Monero wanted to be, for transfer of value between sketchy actors with no KYC. So I don't know. I kind of just looking at the chart.
It's just so easily trackable. I think that's the issue. But
Okay.
looking at the chart, I mean, I think that that's more of a function of Justin Sun propping up the prices.
For the record, I'm not suggesting that listeners go and commit crime on chain. None of this is investment advice, so I'm not suggesting you buy Tron. I'm just saying, Avi, this chart is the best Sharpe ratio I've seen in our space ever. I kind of want to buy it. What am I missing?
I don't think you're missing anything. I think the only thing that you're missing is that it's an amazing Sharpe ratio in the bull market, and then in the bear market, he has no capital, or like in a drawdown, he has no capital to actually defend this thing.
It does look manipulated. It's too smooth.
And so it probably looks like 70 to 90, probably more, probably like a 95% drawdown. If Bitcoin goes down 30% for more than a few months. But I mean, hey, maybe it's a good long. Could be a good punt. I feel like I haven't heard anything. So here's, okay, if I were to construct a Tron trade thesis, the way that it would go is there are a ton of different chains coming out right now. Stable, Plasma. There's one that I'm forgetting the name of. There's Stable and Plasma, at least, that are trying to attract the Tron stablecoin market. They're trying to steal away. Yeah, Tempo, right? That was the other one. They're trying to steal away the stablecoin market from Tron. Like that's kind of explicitly what these chains are built to do, at least at first. And then they go for the stablecoin market at large. But in the beginning, Tron is like kind of the easy quote unquote target. So as they attempt to attack Tron and steal away Tron's largest value add, Justin Sun's going to have to do some pretty crazy stuff to keep Tron, like forefront of mind. And that probably includes pumping the price pretty massively. So therefore, once these chains go live, you long Tron, and that's like your crime. That's like how to long crime. That's a way of longing crime. What do you think?
Without committing it. Yeah, exactly.
Without committing it, you're longing the probability that Justin Sun is going to commit crime to keep his chain relevant.
I mean, as more of the world moves on chain, more crime will move on chain. How do I long crime? Crime is a really good business for criminals. Anyway,
I mean, WorldFi was great. Was a great buy if you did. get into the pre-sale. I mean, everybody could get into the pre-sale, which is kind of the crazy part. Not a lot of people did, but everybody could. And that was a great win. The thing's basically been sideways since. I think that it's probably a good buy soon. Like at some point, I'll probably start scaling in as like a quick try to like get 25 to 35% out of that trade, sort of like how Pump did, right? I mean, it's like the classic trade. You wait for all of the initial supply to work its way out, and then there's some sort of trade in there.
So are you running a complex book right now? I mean, my book is pretty simple. I've got mostly Bitcoin. I've got some ETH and Solana on leverage, and then I have a slug of Aerodrome, and I kind of don't have anything else. And I would say just personally evaluating my own performance recently, it's been kind of like trading performance has been kind of mediocre, but my trading piece of my portfolio is relatively small right now because I'm just so stupidly bullish overall price action that I want to be heavily invested in the benchmarks with light leverage. So I'm not like actively trading around most of my portfolio. I'm actively trading around a small portion of it. But that active trading has been kind of bad. And like my last big trading win on size was Hyperliquid. I closed that out. It was a nice 4-bagger in a couple of months. And then I made a little bit of money on ETH. I guess technically I've got positive mark to market on Solana, but in small size relative to my portfolio. And I'm doing all right on Aerodrome. But I think in general, I'm not seeing the ball as clearly as I'd like to be for a trading portfolio. So I'm minimizing my active trading. And I think the reason why I'm not seeing the ball clearly, and I'm going to expand this out and then pitch it back to you as a question, Avi. The reason why I'm not seeing the ball that clearly is because I think I have an edge in picking mega trends. I think I have a good edge in picking assets for mega trends and weathering volatility and sitting through it. I also think I have an edge for identifying exogenous macro crap that sends our space lower and assessing whether or not it's going to stick or not. Like, for example, in April, both of us were pretty bullish despite the tariffs for a variety of non-consensus reasons, and we were both right. So I think both of us have an edge there. Sort of like bottom ticking the curveballs that come in from outside of crypto, bottom ticking the price action that results from those curveballs, I should say. But I guess where I don't feel confident is when the benchmark is ranging, which Bitcoin technically is. It's like 105 bid at 120. I don't feel like I'm good at like picking altcoins that send while Bitcoin is ranging. I feel like I'm more on the fundamentals side of that trifecta we talked about earlier in the pod, where I can sit in stuff, but I'm not like in and out of things very effectively. So I'm trying to do what I think is prudent, which is minimize my in and out trading because it's a weakness or a blind spot. And I'm kind of curious how you structure your portfolio. Like, are you spread across tons of alts waiting for the boom? Are you actively trading?
No, I am actively trading. I'm like trying to figure out, okay, well, like what are the trades that I want to have in my book that I think are going to outperform? And it starts with, do I think Bitcoin's going up or down, right? Like we are ranging, but ultimately, if I think, like so many people have tweeted over the last 3 weeks, that this is cycle top, then I basically don't want to be trading at all. Then I basically just want to be in cash, and I want to forget about the market.
Do you believe that, by the way?
No, I mean that's what I'm getting to, is like I don't believe that. I think people have continuously get too bearish on this market, continuously try to call top. And the reason that people continuously try to call top is because no matter what they say out loud, they believe in the they believe in the cycle theory, and they're trying to call top on the cycle. But basically, I don't believe in the cycle theory. I don't believe that $115,000 per Bitcoin, only 50% higher than where we got in 2021. Maybe 60, I guess 60% higher than we got in 2021 because we hit 70K. Like, I don't believe that is the fair value for Bitcoin given all that's been happening. I think that we can continue to go up, and that I think that we've spent enough time around prices close enough to this that we're not going to get a massive sell-off, because basically like you look at the realized value of the Bitcoin that are held by your average individual, and the price is reasonably high. It's not like Bitcoin had this incredible rally and left everybody in the dust, and then now everybody's sitting on like unbelievable UPNL. I mean, basically, even the people that bought post-Trump election have sold a substantial amount, returned it, and their average price is much higher. So I don't think that we're in a situation right now where Bitcoin's going to sell off massively.
Yeah, MVRVZ is only 2.
Exactly. So like the statistics just don't tell me that we're in for trouble. I think people are pattern matching to they're basically just using the chart without looking at the actual statistics. Like the chart looks similar to a 2021. Everything else looks radically different. And so when that is the case, I tend not to just go by the chart that tends to be the wrong case. So basically, if I thought the market was going lower, then I would step away. What I'm doing now is allocating to the assets that I think have the best narrative for the upcoming 1 to 2 months that will be able to take advantage of Bitcoin price going up. And those assets are in no particular order: Ethereum because of the DATs, Solana because of the DATs, BNB because of the DATs and because of regulatory issues, and then Bitcoin because I think that Bitcoin is going to do well. I also still own, as part of my long-term bags, a little bit of syrup, and I do have a little bit of hype long right now.
Okay, so you're not like all over the place. You're pretty
I'm not
pretty
all over the place. And
concentrated.
basically that is structured so that if Bitcoin trades to 120, 125, 130, hopefully these assets massively outperform, or these assets can outperform while Bitcoin goes sideways. I'm looking for from my entry points, 25 to 40% return on these trades, at which point I'll just rotate them back into Bitcoin. I missed the hype trade, not the hype trade, the pump trade, despite talking about it, which kind of sucked. I was looking for it. I do think that this is as close to alt season as we've had in a while. Things are popping off.
Yeah, we're getting that tingly feeling.
Right, there are things that are doing well, so it's like I am looking for more stuff that I think would be good to long. But if we're just talking about like, look, in the last 7 days, we've had some pretty good performers out there. This fucking MYX thing was crazy, by the way. I don't know if you saw it. It like giga rallied.
Back to pump for a quick second. I kind of missed it too, but I just thinking about it intellectually, even though it's disgusting to people who got into crypto because they wanted to sort of like decentralize the world and, put power in your wallet instead of in the banks, all that mumbo jumbo, the anarchist stuff too. Like, yeah, okay, fine. Meme coin gambling isn't really it, but at the same time, I like pump because it's a real business. It's basically the slot machines at the Wynn Las Vegas on chain at a global scale, and anybody can go gamble on a Ponzi whenever they feel like it, or create one and see if other gamblers come in. And pump, earns like $1.5 million a day is no joke in EBITDA, right? That's a real business right there. So I kind of buy it. I think, Hyperliquid is more sophisticated gamblers gambling on more stock market-y like things, but pump is just straight up Vegas on chain. And I know it's rallied a lot, but Vegas on chain could potentially be worth a lot more than where it's currently trading. It's pretty extraordinary.
Yeah.
I guess your risk is that the hot new show in Vegas comes to town and it's like a bonk or a launch pad that actually provides value to people who want to create more complex tokenomics or equities on chain. Maybe there's a better product out there, or maybe pump is just gonna be one of those like Tron like chains that last forever. I don't know, but
I think I like the founder a lot. I think he's smart. I think that they're approaching this in a smart way, and I think that it makes sense for it to continue to hold the lead. I think of it now, it's like there's this weird corner of crypto that we kind of touched when we went on Thread Guy's stream. That's like this meme coin Gen Z streamer culture overlap.
That was
with
so Gen
crypto.
Z.
And it was dope. It was cool to be on his stream. I think he's actually a very smart guy. You know, and I enjoyed our conversations. He's got good takes. I think that there is, for example, Twitch has just taken over streaming in the world of Gen Z, and they're probably not going to lose anytime soon. I mean, even like YouTube can't really compete with them. Not, you know, Amazon owns Twitch now, and they just continuously grow. And like if you stream, that's where you go. You're live streaming on TikTok or you're live streaming on Twitch. And I view that like that's Pump Fund's niche. Now that they have streaming, like that, you want to create a coin, you go there. And that's where the visibility is. That's where the network effect is. That's where all the people are. You just go there. And so as long as there's this urge to gamble and create these coins, Pump's going to continue to do well. And I think that, I mean, I just think that gambling culture, we talked about this a lot on this podcast, but every day, like literally every day, I come across another reason for why gambling culture is going to continue to grow and why you need to figure out how to freaking invest in this. And I'll give you a great example. I'm reading the New York Times, propaganda rag, but I do read it from time to time. I'm reading the New York Times, and there's this article about this girl that lives in the US that won a house in Ireland via raffle. And so, Jonah, you might ask me, what do you mean she won a house on a raffle? Is this a company that was like, buy our yogurt, and on the lid of our yogurt, you get an entry for a raffle? No, Jonah. The owner of this house, instead of trying to sell the house, used a platform called Raffle, which allows you to sell raffle tickets to give away the house to the winner of the raffle ticket. What you do is you set a minimum number of tickets sold and a price per ticket. In this case, this owner chose 150,000 tickets and $5 a ticket. So night was that. Why am I so bad at math right now? But 750.
Yeah.
Set 750 total. And if you hit 150,000 ticket, the minimum threshold, then there is a winner that's selected from that pool. They ended up selling 200,000 tickets. I think the house is probably actually worth 500,000.
But if they'd only sold 20 tickets, they would have had to honor it and sell the house, right?
No, if they said below the minimum, you're not obligated to sell the house. What you do is you split the raffle winnings with the person that won the raffle. So you have
I'm going to sell my house like this tomorrow. This is incredible.
Exactly. This is a freaking no-brainer.
Avi,
like,
we have
Jonah,
a platform.
You could probably go out there and
let's market my house
like 50% premium. If you raffled off a Beverly Hills real estate and you set a minimum of like $10 million for your house, like there's no downside for you.
Let's bet on this shit, Avi. Let's bet on this.
Either because there's some like gamblers out there and they're gonna fucking run this thing up and pay twice. Like you're gonna get twice the amount of money for your house because of this gambling addiction. If anyone out there is selling a house, look into this. Like this is crazy. And the moment I read it, I'm like, this is genuinely a brilliant idea.
So funny. Oh my God. I'm going to talk to my wife about this. Like we're absolutely listing this thing on raffle.
And here's the thing. If you hit like an obscene, like let's say you set the minimum at 5 million, like there has to be 5 million. That's the minimum amount you're willing to sell your house for before you actually like let go of it. If it hits 4 million, you get 2 million, and the winner of the raffle gets 2 million, and you keep your house.
This is a joke, Avi.
No,
okay, it's like I'm already doing the math. What is my reputation worth? Like, can I get away with this?
I mean, it's not
everybody knowing where I live.
Risk. I mean, it's just why not?
Gambling is everywhere.
Like why not run a mini lottery for everything? I mean, like. What if you freaking ran You know what would be the stupidest? It's like the stupidest thing in the world, right? I could run a raffle for my net worth. I could say, look, guys, I'm worth X amount. I need at least a 10% return on this. You know, and then I'll give you guys
All my
number,
money.
and I get the whatever. You know, it's like it's
Don't
crazy.
do that, because then you invite, to go back to an earlier point in our podcast, you invite the crime. You don't want to do that.
Well, how do I invite the crime if I raffle off? You know, if I just run my individual raffle.
You just, you go and state exactly how much the criminals get if they capture you and handcuff you and stick you in a hole in their basement in a cage or whatever. But I take your point.
Fair. But I mean, basically, my whole rant with this is that gambling culture is not going away, and that you guys should probably try to figure out a way to benefit from gambling culture. Robinhood, I think, is still an amazing bet for this.
Yes. Pump is probably too, because eventually they're going to realize, hey, instead of just running the only game in our casino is Ponzi schemes, meme coins, right? What if we add the equivalent of a blackjack table, a baccarat game, craps? What do those games look like? Maybe it's pump.raffle, right? Where you just start your on-chain raffle and link your asset to it, like the house or the deed or whatever. I think that if you believe that the founder is smart, he will not. And he probably realizes he's running Vegas on chain. He's probably not going to want just one game in the casino. He's going to add more games. So I think that's an opportunity for investors and for gambling protocols to diversify beyond. Like, I don't understand why, Avi, maybe you can answer this. Why is it that the only game so far that's in the on-chain casino is a Ponzi scheme?
Because it works. And I mean, basically, it's because it works, and if it ain't broke, why fix it?
I think Axie tried to create other kinds of games on chain, and the failure of Axie one-shotted a bunch of idealistic on-chain gambling game type people. But I think there's a huge opportunity.
I think it's also just there's not a huge, I don't know if there's huge overlap between those two. I think the old school idea of casinos on chain, it is clearly working to some extent. I mean, Shuffle and Rollbit continue to do well. I do like both of those names. I don't own them right now. Maybe I should as a trade, but I think that the overlap is smaller than you might think. That's my take. Is that the type of person? Yeah, I mean, basically the type of person that is willing to play blackjack is not the same type of wants to play blackjack is not the same type of person that wants to gamble on meme coins. It's like,
I think raffles are better on chain.
Like raffles are effectively what, like, you need to be able to, roulette might be it, right? It's like you need to be able to 20x your money quickly. You need to be able to get like this huge massive payout for low upfront put in, and that's kind of what meme coins are, and that's why meme coins captured the attention of people, is because you don't play blackjack or basically any casino. You really don't play any casino game to make hundreds of thousands of dollars unless you're already starting with like a reasonable bankroll. Like, you hear stories. The reason that people buy meme coins is you hear stories of somebody putting in $350 and walking out with 50,000.
Yeah,
right. Like that's why you play the game. Like you put in at 100K market cap and it goes to a 10 mil market cap, and holy crap, you've made an obscene amount of money.
It's funny. Like I did that once with Bowden. I ran it up pretty big, and then now like everybody, even my mother-in-law, is like, Jonah, can you like put some of our money in one of your shit coins? You're good at it. I'm like, no, I did it once. She's like, but don't you talk about crypto all day? Isn't that your job? And I'm like, well, yeah, but I'm not going to be able to pick the right shit coin for you. That just happened. I just got lucky once, so it's everybody, like even people who are not gamblers can kind of emotionally connect with the whole narrative of putting $350 in and taking 50K out. I totally agree with you.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
In terms of building the on-chain casino, what are the games? This is the question. What are the games that offer a stupidly asymmetric return? It's not poker. It's not blackjack. It's definitely Ponzi schemes and maybe raffles too. Maybe like lotteries, lotteries with slightly different rules. So yeah. I guess Robinhood is a good way to play gambling on chain.
Robinhood just launched their social, or they're teasing. I don't know if they launched it. They're teasing their social feed, which I think is going to be very, very, very valuable for Robinhood. It's gonna up the ante. We're gonna have Wall Street bets in it now. It's pretty damn powerful, if you ask me.
Wow, really? That is pretty powerful. Maybe I should own some Hood. I felt like I kind of missed it, but I haven't really cared that much. But maybe it's still got room to run. I think it's certainly good for 30 to 40% from here if crypto goes on a bull run. Galaxy could double easily from 25 or 27 or wherever it's trading now if we get the hot AI space again. AI is kind of cooling off a little bit. I think it's amazing how much of the AI narrative, like, it even filters through to tokens like Tau. It's amazing how much of the AI narrative is just tied to hype around the latest ChatGPT release. Like ChatGPT 5 was not that much better than the previous version. Hype cooled. People adjusted their parabolic rallies into more like linear extrapolations of the trajectory between ChatGPT 4.0 and ChatGPT 5. And all AI has, it's not like a white hot clusterfuck the way that it was 6 months ago. But I think it could come back. And like we say, we say on the podcast all the time, it's about the second derivative of the narrative, not the narrative itself. If AI is kind of trending, but not, mortgage your house to buy AI related items hot, are things going to get worse or better from here? I think probably better, I think this is a temporary trough in the AI bull run, a bear trap, if you will. So maybe there's an opportunity to dip by the overlooked AI assets, both on chain and in TradFi.
I agree. And hopefully we'll be able to find some, because one thing that I'm actually pretty excited about is the fact that we seemingly have some real products coming online over the last call it like 3 months. I think there's just been a lot of hype over things that are actually generating revenue and generating real usage, and figuring out, okay, like where do we place crypto into the overall world? Like what actually generates value from crypto? I mean, Shuffle being one of them. We were just talking about this, but it's done well. Rollbit's done well. Hyperliquid's done well. But one thing that we haven't talked about that's done well is something called Cards. I don't know, Jonah, if you've heard of it.
Cards? No.
Cards. So this was like the Trench Warrior win, and I'm hopeful I can find some other Trench Warrior wins.
Didn't Ansem shill us this, or was he shilling a different on-chain card game a couple of years ago when he came
was
on
shilling
our
a completely different thing. Cards is effectively a marketplace for Pokemon cards, which makes total sense. Like if you think about it, there are all these card games out there that have a robust secondary market. I mean, the market cap of Pokemon cards that are traded in the tens of millions, but nobody could actually define it because there was no like central marketplace. It was all just on freaking eBay. And so there was no way to actually collect that data effectively. And cards is becoming the place. You basically like verify and upload your card and then turn it into a digital asset and trade it with other people on the platform. And it's doing a ton in revenue. It 10x'd in like 2 weeks because basically nobody knew it existed. And if you go talk to the founder, you kind of see why. He's just this heads down grinder type. And now I think it's actually still reasonably valued, especially because they can probably expand to other card markets pretty easily, like baseball cards. But
I got a bunch of Marvel cards that some of which are pretty valuable. Like I love those.
Really?
Yeah, I used to collect them when I was in elementary school.
but it's stuff like this cards marketplace. Prediction markets are obviously popping off. Everyone's talking about prediction markets.
That's why I'm
Actually,
long Aerodrome, because I think I think AMMs, prediction markets will end up on chain on AMMs, and I think Arrow is a good play for that. I'm long new market creation when I'm trying to structure my portfolio. I'm long the things that I think will benefit from not just new shitcoins getting put online for people to gamble, but new markets, which is a prediction market, a meme coin, a Pokemon card. I didn't even think about that. That's really cool. Wait, how do we get to this cards thing? I searched cards crypto and it's not there. What am I looking at here?
I'll send it to you. But if you go, if you just type in cards on CoinGecko, it's called Collector Crypt.
Oh, Collector Crypt. Okay. Your digital bridge for real world collectibles. Cool.
Yeah, no, it's pretty sick.
Love it.
And I think you're right that AMM, like you're going to be able to. You will be able to trade these things on AMMs at some point in the future, and you will also be able to borrow against these positions at some point in the future, which is really where it all like this is where it's all starting to happen. Is you're getting the tokenization of everything, you're getting the gamification of everything. If you hold, there was a girl that I kind of knew in college. We talked a few times, but she was well known because her dad had like a $3 million Hot Wheels collection, and like somehow that spread like wildfire through her college. This girl's dad had a multi-million-dollar Hot Wheels collection, and I always thought to myself, like, how fucking rich do you have to be to spend what presumably was, if not millions of dollars on Hot Wheels, hundreds of thousands? Like, I doubt that like this guy like 100x on his Hot Wheels collection.
Maybe I don't know. Maybe he got a great entry price. Maybe he was just one of those kids.
He was like still buying them. Like he definitely, I think he definitely spent at least hundreds of thousands of dollars on this.
Oh, that's ridiculous.
And the question is, like, how rich do you have to be to lock up hundreds of thousands of dollars and now have like millions of dollars of your net worth locked up in freaking Hot Wheels?
I've got a Hot Wheels collection. I gave it to my son recently. I collected it when I was a kid, but mine's probably worth $100. You know, like I don't understand. I got mine secondhand.
Is it worth more or less if your son chews on them?
No, these are indestructible. These aren't like the Chinese plastic toy cars that you buy today. These are like, if you look under the bottom of my Hot Wheels, it'll say like made in France, 1969, you know, and it'll be like some cool looking Peugeot, or I have an English school bus that's awesome. But these things are rock solid. Like they are die cast metal toys. And it's really amazing.
Well, my point about this specifically is that in this new world, you'll be able to unlock value from any source of wealth. So if you have a bunch of fancy wines in your basement, or if you have a bunch of Hot Wheels in your attic, or if you have a bunch of Pokemon cards, or if you have a bunch of polymarket positions that don't expire for 3 years, you'll be able to borrow against them.
Wait, I have a question. So I have a lot of that stuff.
That makes me very bullish on Aave. That just makes me like Aave is the future. I'm so bullish.
I've got coins on. Sorry, I've got coin. I got a 3-legged buffalo nickel. I got Hot Wheels. I got Marvel cards. Avi, question for you: if I use this this collector crypt thing, why do I care about selling NFTs of my Marvel cards? I want to like have my actual Marvel cards Like the beautiful thing about a Fidenza is that if you buy one, you can mint the physical if it's never been minted before, which is an actual print that gets sent to you by Tyler Hobbs, and he signs it. Like I do believe that there's a beautiful connection between NFTs and physical objects. Why are people digitizing their Pokemon cards and selling the NFTs but keeping the physical? Like, who would buy the NFT of a physical Pokemon card? I don't understand.
No, you own the card.
Oh, so when people buy the NFT of the card, you actually owe them. It's like an eBay type system where you
Yeah.
have to send them the physical too. Otherwise,
As far as I
interesting. Yeah, I think that's super valuable, and also like much
because
like
the reality, like the reason that it's so valuable is because it standardizes pricing and increases liquidity. Like that's what it is at the end of the day.
Yeah,
is you can easily compare, you can easily buy, you can easily sell. It's just it's way better than eBay.
You know what that would be great for also is like DVDs. It would be great to be able to have a digital version of your DVD, even if you have the physical as well, so that you can watch it or stream it wherever you are. I really believe in the connection between the physical and the digital. I don't think eBay does a good enough job of it. OpenSea is pure digital. I like the idea of something that marries the two, and it is kind of another way to gamble. And yeah, Ave, you're right. That people will borrow and lend against these assets too. This is what crypto is for. Crypto, as we've said a million times, is the best way to move value on chain. And so much value is locked in weird places off chain. This sort of thing is a great place to start. So I guess the theme of this podcast is like, how does the gambling economy move online, the collector economy? How can you find pockets of value appreciation in overlooked areas?
Yeah,
Bitcoin is ranging.
we pointed you in some good directions. If you guys have any ideas for us of where to go next in this exploration, let me know.
This is fun. Finally, crypto's got some real cool stuff to do.
No, this was great, Jonah.
Good talking to you, man.
A pleasure as always.
Hope you feel better soon, man. It was
Thank you.
It was wonderful to record. All right, until next week.
See ya.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.